Welcome to another session on corporate accounting. In this session, we shall discuss accounting done during an amalgamation. The example we would be discussing shall help you understand preparation of balance sheet in the books of the transferee company. ARC Limited and Prime Limited are in the business of similar nature. They decided to amalgamate to form a new company called Big Star Limited, who took over the assets and liabilities of both the companies. The following are the balance sheets. On the liability side, you see share capital of 75,500 and 45,500 for ARC Limited and Prime Limited respectively. Sundry creditors is 3,000 and 2,000 respectively. General reserve is 4,200 only for ARC Limited. Profit and loss account shows 800 and 4,500 respectively for ARC Limited and Prime Limited. On the asset side, we have goodwill worth 30,000 and 20,000 for ARC and Prime Limited respectively. Freehold premises show 10,000 only for ARC Limited. Plant and machinery is 18,300 and 13,450 respectively. Stocks are worth 16,000 and 11,550 respectively. Sundry debtors show 7,500 and 6,000 respectively. Cash at bank is rupees 1,200 and 1,000 for ARC and Prime Limited respectively. We need to prepare the balance sheet after amalgamation as well as journal entries. Let's get started. Calculation of purchase consideration is an important step. Purchase consideration refers to the payment made by the transferee company to the transferor company for the business taken over. It includes all types of payments made in the form of shares, securities, bonds, or cash, etc. Let's draw a table and ascertain purchase consideration by deducting assets of ARC and Prime Limited respectively from sundry creditors. For ARC Limited, the assets total 83,000 minus sundry creditors of 3,000, we get 80,000. For Prime Limited, the assets total 52,000 minus sundry creditors of 2,000 and we get 50,000. We add 80,000 and 50,000 to get 1,30,000, which is the purchase consideration for Big Star Limited. Let's make the journal entry. Purchase consideration is rewritten as business purchase account and is 1,30,000. 80,000 gets apportioned to the liquidator of ARC Limited, and that is the purchase consideration portion of ARC Limited alone. 50,000 gets apportioned to the liquidator of Prime Limited, which is the purchase consideration amount of Prime Limited alone. Goodwill is derived by adding up the values of both ARC and Prime. 30,000 plus 20,000 gives 50,000 as a journal entry. Freehold premises is 10,000 and that's for ARC Limited alone. Plant and machinery is 18,300 plus 13,450 and we make the journal entry as 31,750. Stocks are shown as 16,000 and 11,550 for ARC and Prime Limited. We add these two to make a journal entry of 27,550. Sundry debtors of 13,500 in the journal entry comes from adding 7,500 and 6,000 of ARC and Prime Limited respectively. Cash in bank is obtained by adding 1,200 and 1,000 to make the journal entry of 2,200. To sundry creditor account, we apportion rupees 5,000 and that is obtained by adding 3,000 and 2,000 respectively. The purchase consideration amount is added up to record the journal entry of 1,30,000 as business purchase. Now let's have the balance sheet after amalgamation drawn. Fixed assets add up as 50,000 for goodwill, 10,000 for freehold premises and 31,750 as plant and machinery. Under current assets, we have stock of 27,550, 13,500 as sundry debtors and 2,200 as cash at bank. On the liability side, we have 1,30,000, which is the purchase consideration. This amount, when divided by rupees 10 as face value of one share, gives 13,000 shares. These are the new shares that need to be issued. Nothing is shown in reserve and surplus. Sundry creditors is 5,000. We add up both sides of the balance sheet to get 1,35,000. Here are the working notes. All 5 conditions given in Accounting Standard 14, AS 14 are fulfilled, and this is applicable to amalgamation cases. there is no balancing figure in the form of either general reserve or profit and loss account. Purchase consideration of rupees 1,30,000 minus share capital of ARC and Prime put together, that is 1,20,500, would give 9,500. That is 1,30,000 minus 1,20,500. Purchase consideration, as you see, is 1,30,000, and that is more than the share capital of ARC and Prime put together. Therefore, we add general reserve of ARC, that is 4,200, from the balance sheet with the profit and loss of both ARC and Prime of 5,300 to get 9,500. The excess to be written off is rupees 9,500 obtained from subtracting purchase consideration from share capital. 9,500 minus 9,500 is 0, and therefore there is nil balance to be shown. Happy learning!